So what is swing trading? Maybe you have wondered this back in the past. There is a lot of different types of trading out there, such as scalping, such as swing trading, such as intraday, such as long-term swing trades. But for the moment, I'm going to focus on the short-term swing trades that you can take advantage of within a few days or a week. So it's sort of the thin line between swing trading and intraday trading, and it is a very important technique to know if you want to be able to take advantage of the market. So for today's video, we're taking a look at Ripple and its price action. It is looking to make a bullish correction and a head and shoulders pattern that formed right here as a result of this push up from the whole market. Well, basically, currently we are seeing a break of the neckline of this head and shoulders, along with the break of the 50-period moving average, which is this big orange line right here, and few other indicators such as a divergence in the relative strength index down here that point towards more upside when it comes to Ripple. Now, we did break out of this pattern, and right now I'm going to show you how to enter a swing trade properly. So first of all, you find the next zone of support / resistance. That would be either directly on this level around the $0.6 mark or slightly above. So you can consider this swing high right here a target. Right now, let me remove this just so you can see a little bit of a clearer picture. This is the target, and it does coincide with the 200-period moving average, which is always a good target for price to go towards. Now, a scalp right here, scalping or something, would be a little bit different than swing trading. So you would enter this position as the high of this candle was broken with a tiny stop loss, and you would take advantage of a quick one-to-one move, making, the same amount of money that you risked on this trade. So it's a good move, and that's how you scalp, right? You can scalp on the daily time frame, you can scalp on the hourly time frame, entering as soon as this bullish candle closed, maybe even lowering your stop loss and creating a larger win for yourself. So this would be somewhat of a 1.2 or 3 risk to reward ratio, or you can even go into the 5-minute time frame, try to catch another type of, well, I wouldn't go down to 5 minutes, I would do it on the 15-minute time frame, where you would see this beautiful close on the 15-minute time frame, put your stop loss right below this current candle, and aim for a much larger risk to reward ratio of 3, for example. So this is scalping, or more so a trade that you want to take advantage of very quickly, right? You want to trail your stops aggressively as the price is going up. So in case the price starts moving down, like it did right here, you would cut your losses and take profit correctly, right? But in swing trading, it's a little bit different. So if you were to take this as a swing trade, you would probably set your stop loss a little bit more generously down below. You could have the same potential entry, but you give the trade some space, right? Now, as a general rule of thumb, I would always put my stop loss below one of the shoulders of the head and shoulders pattern. However, in this case, we do have a very clear swing low right here and a very bullish candle emerging right after it, and then the next candle breaking the previous candle's high. So this I would consider a solid entry point. So my stop loss would be put right down below this area, and I would be aiming for the target that I did mention before. This is a risk to reward ratio of around 4.25, and in general scalping, you want to take advantage of an upwards move and not let price move down at all. But in these quick swing trades, you want to let the trade move. So you can go like this, and I fully expect a correction and a retracement into this level right here, and then a potential movement towards more upside, another swing down lower, and then another potential move into the target. Now let's say in this situation, after we create this bottom right here, we would move or trail our stop loss right below that area. And then once we make the next swing, right, and then come back down and then start moving up and break the previous high, that's when I would move my trail to the next area. And as it starts nearing my target, I would try to trail more and more aggressively based on lower and lower time frames to make my trade always have a positive risk to reward ratio. So this is how you enter quick swing trades, whereas scalping, on the other hand, is just catching a quick move up. Intraday trading is just catching a quick move, and swing trading is allowing the trade to do its thing and trading and trailing your stops as well based on the consecutive lows that are being created or highs if you're shorting the market. Now let's take a quick look at Bitcoin with another example of why swing trading is potentially better than other types of trading. So let's say you took a short around this area right here. So as I plotted the graph, you can take a short here with a stop loss relatively nicely placed right above this correction pattern. So if the price continues moving up after making a breakdown here, then your trade is invalidated and it is okay to take a loss, and that's the reason why we have stop losses in our trades, so it doesn't eat our account up. And so if the trade idea is invalidated, we are not going to be part of it anymore. But what's the different types of trading that you could do right here? Well, you could do an intraday trade first and foremost, where you would take advantage of a quick move down, and that's about it. You take your profit by trailing your stop loss below every daily candle and everything would be fine. However, a swing trade in this idea would be a little bit better because you're adding a intraday type of stop loss, so very tight, but you're aiming for the 10K level, knowing that rate hikes are still going on and the market has a large potential to keep moving down. So right now, whatever we see Bitcoin doing, even if it moves up here and then makes a movement down, we will be in heavy profit. So this is a risk to reward ratio of around, is it 5? Yeah, of around 5 at this point. So it's a huge risk to reward ratio, and it is definitely something that is very, very nice to see. Wait, there's no chance this is a 5 risk to reward ratio. What is going on with this chart? Okay, so this is the risk to reward ratio should be the length of the stop loss times, all right, so this should be 1, 2, 3, 4, 5, 6, 7, around 1 to 8 risk to reward, right? I don't know why my chart is bugging, but it's definitely larger than that. And as you can see, with swing trades, you are able to take advantage of a larger move based on fundamentals such as these rate hikes rather than anything else, obviously with a little help of technicals as well. So that's it for today's video. I hope you guys enjoyed it. Make sure to subscribe if you did. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the crypto world. So thanks for watching, and I'll see you all in the next video.